For years, corporate America operated with one dominant belief: growth would solve everything, expand faster, hire more people, launch more products, open more locations, take bigger risks. That mindset shaped the modern economy for decades, but something major has quietly changed inside the business world. Today, companies are operating with a completely different strategy because businesses no longer trust the future the way they once did. Economic uncertainty feels permanent, consumer behavior feels unpredictable, competition feels more aggressive, and companies across America are now redesigning themselves around one central goal: surviving uncertainty. That shift is changing everything. One of the biggest changes happening inside corporations right now is the move away from aggressive expansion. A few years ago, companies proudly talked about disruption, innovation, and rapid growth. Now executives constantly talk about resilience, flexibility, and efficiency instead. That psychological shift is huge because businesses are no longer building for perfect economic conditions. They are building for instability. One major reason for this change is what companies experienced over the last several years. Supply chain disruptions, inflation spikes, interest rate hikes, labor shortages, banking fears, rapid changes in consumer spending. Businesses realized how quickly stable conditions could disappear. And once corporations experienced that level of unpredictability, many executives stopped assuming the future would remain smooth. That fear created a new corporate mindset. Today, companies increasingly focus on protecting profits instead of maximizing expansion at all costs. This is why businesses are becoming more cautious everywhere. Retailers are reducing inventory. Tech companies are cutting experimental projects. Restaurants are simplifying menus. Streaming services are spending more carefully. Even profitable corporations are acting defensively. Businesses no longer fully trust strong demand to last forever. That is one reason efficiency became such a major obsession. Efficiency sounds harmless, but it changes how companies operate completely. Businesses now want leaner systems, smaller teams, lower operating costs, fewer risks. Because leaner companies can adapt faster if conditions suddenly change, and flexibility became extremely valuable. For years, many corporations believed bigger automatically meant safer. Now businesses increasingly believe flexibility matters more than size. Large operations come with large risks, huge payrolls, complex supply chains, massive inventories, expensive infrastructure. If consumer demand weakens unexpectedly, oversized companies can struggle very quickly. That is why many businesses are intentionally acting smaller and more controlled now. Artificial intelligence is accelerating this strategy dramatically. Many companies no longer view AI simply as a future technology. They view it as protection. Businesses use AI to automate tasks, reduce labor costs, improve forecasting, analyze customer behavior, and streamline operations. Executives increasingly see automation as a way to survive uncertain economic conditions more safely, because companies that can operate efficiently with lower costs feel more stable during downturns. And investors reward that stability heavily now. That is another major shift happening behind the scenes. For years, Wall Street rewarded aggressive growth. Companies could lose money for years as long as expansion looked impressive. But today, investors increasingly reward predictability instead. Stable profits, controlled spending, reliable cash flow, efficient operations. Businesses are under enormous pressure to prove they can survive instability, not just grow during good times. That changes executive behavior completely. When investors reward caution, companies naturally become more cautious. This is why corporations increasingly focus on recurring revenue too. Memberships, subscriptions, loyalty programs, monthly payment systems. Businesses want predictable customers who continue spending automatically over time. A monthly subscriber feels far safer to companies than depending entirely on random future purchases. That is why subscriptions spread across nearly every industry. Predictable revenue became one of the most valuable assets in modern business. Another survival strategy companies increasingly use is simplification. For years, businesses expanded product lines aggressively because more options supposedly meant more growth. Now many companies are reducing complexity instead. Smaller menus, fewer product variations, more focused operations. Businesses realized complexity becomes dangerous during unstable conditions. Simpler operations reduce waste, lower costs, and improve flexibility. Consumers are seeing this shift everywhere. Retail stores feel more repetitive, restaurant menus are smaller, customer service is increasingly automated. Companies are prioritizing operational stability over endless variety, and data became central to this new strategy too. Modern businesses collect enormous amounts of behavioral information: what customers buy, how often they shop, what products feel essential, how spending changes during uncertainty. That data helps companies predict risk more accurately, and prediction became one of the biggest corporate priorities in America. Because businesses fear surprises now, executives no longer assume consumer behavior will remain stable forever. Consumers became much harder to predict. People switch brands quickly. Trends rise and collapse overnight. Spending patterns change rapidly through social media and economic pressure. That unpredictability makes businesses nervous, so corporations increasingly prepare for weaker conditions before problems fully appear. This is why companies often cut costs even during profitable years. They are preparing early instead of reacting late. And perhaps the biggest strategy companies are using to survive uncertainty is emotional control over customers. Businesses increasingly push ecosystems, memberships, subscriptions, loyalty systems, and recurring services because customer retention feels safer than constantly chasing new buyers. A loyal repeat customer became incredibly valuable. Businesses want customers locked into systems that continue generating predictable revenue over time. That reduces uncertainty, and uncertainty is now one of the biggest fears inside corporate America. Because today, businesses no longer believe stability can be taken for granted. For decades, companies built strategies assuming economic growth would continue indefinitely. Now many executives believe instability itself may be permanent. That changes how businesses hire, how they spend, how they expand, how they treat customers, how they design products. Everything becomes more defensive, more cautious, more controlled. And perhaps that is the biggest hidden shift happening across the economy right now. Corporate America is no longer building businesses designed purely for maximum growth. It is building businesses designed to survive a world that feels increasingly unpredictable. Because in today's economy, survival itself became one of the most important business strategies of all.